The state of California is going from a financial surplus to a projected deficit, and the tech wreck is likely to blame. Robert Frank joins us right now. He's got more of these details. Robert, good morning.
Good morning, Becky. Last year, California had a $100 billion budget surplus. Now it's expecting a $20 billion deficit for the next fiscal year. The main reason, as you mentioned, tech stocks. About half of California's income taxes are paid by the top 1%. And much of that comes from capital gains in tech. So you're talking IPOs, stock sales, and those option grants. Revenue from capital gains expected to fall from $31 billion last fiscal year to $16 billion. So basically cutting that in half. Last year, California had fewer than 50 companies that went public. That's down from over 200 the previous year. Layoffs at Salesforce, Meta, Twitter, and all these other big tech companies also hitting the state's payroll tax collections. You add to that the end of federal aid from COVID and their higher spending on social programs, and the deficit for the coming fiscal year, which starts in July, expected to be over $24 billion. New York also looking at a deficit of about $3 billion this fiscal year. That is tied to profits from Wall Street, which has fallen by more than half. But Becky, this is sort of the consequence of these two states being so dependent on the highest earners, which is the most volatile income stream. So when we've seen a market turnaround like we've seen in the past year, that really quickly affects their fiscal picture as well.
Yeah, Robert, I think a huge part of that is budgets that anticipate the good days are going to be there forever, and the federal aid. I mean, New York's in the same position. It got aid from the federal government for COVID that I think New York City at least started budgeting as if that money was going to be around forever, too.
Exactly. And California did something a little smarter than New York in that back in 2014 under Jerry Brown, they created a rainy day fund for exactly this situation. So the good news for California is they've got about $25 to $30 billion in that rainy day fund to help them out. The problem is the legislature already wants to spend that. Now that they've spent the past 3 years building it, they want to spend it this coming fiscal year on these recurring social programs, so that would wipe that out. So that'll be the battle there. New York might start thinking about something similar.
Robert, thank you. Robert Frank.